We got the 10 home commandments of home buying. You see, you guys went crazy on this post. I did a live, but the live didn't work out. I didn't save it. Instagram was hating. So I figured, why not do a follow-up video? Because my DMs, emails, everything has been going crazy about this one post right here. So let's break this down, right? The 10 commandments of home buying. Rule number 1, thou shalt not change jobs, become self-employed, or quit your job. Now, let me say this. This is all in regards to if you're in the process of buying a home, you just got pre-approved, or you're in contract to buy a home, all right? You never want to change jobs. You never want to become self-employed, because remember, we need a 2-year work history when we're verifying your loans. Your employment, all right? So now if you go from W-2 employee to self-employed and you don't have a 2-year work history, then guess what? Your pre-approval is now blown up. If you're in contract, the deal is dead. Now, you can switch jobs if you're going from W-2 to W-2. That's okay. If you have a gap in your employment, just make sure you can document that to your lender. But the number 1 rule is you should never, ever try to change your job while you're in the process of buying your home, all right? So that's commandment number 1. Commandment number 2, come on, Toots, let's walk this way. We gotta go to the office. Thou shalt not buy a new car, a truck, or a van, or you will be living in it. Major facts. Too many times, and look, I understand people need transportation. You need a car, you need a vehicle. You gotta get around, you gotta get to your bag. I get it. But you have to understand, if you're gonna buy a car and it's in your personal name, it's going to be included into your what? Your debt to income ratio. So if you're pre-approved and you're looking to buy a house and you don't have that car payment included into that pre-approval, you could blow up your entire deal by adding a vehicle into your equation. So my advice is buy it in your business name, okay? So that way it doesn't show up on your personal credit, and let your business pay for it and pay for it out of your business account. So that way the lender doesn't have to include it into your debt to income ratio. Now, you're gonna need to do that for 12 months if you wanna exclude that out of your debt to income ratio. But if you're just buying the car brand new, if you buy it in your business name, it won't show up on your personal credit, all right? So commandment number 3, thou shalt not use credit cards excessively or you'll let your accounts fall behind. Oh my God. This should have been number 1. Look, I know a lot of you guys want to do this credit card hacks. You want to get your points. You want to do what you got to do. I get it, right? But you have to remember, if you're not paying off those balances, the rule of thumb, they say 30% or below, you want to pay your balances off. Me personally, I tell people 10% or below, because that's going to affect your credit score. If you max out your cards and then it's reported to your credit report, your 700 credit score might go to 620, just like that in 30 days, because now that availability, your utilization is high. So rule of thumb, if you are going to use your credit cards, make sure you can pay them off to 10% or below the balances, so that way you keep your credit scores high. Now, my advice is just don't apply for no cards. Don't give yourself more problems than you need if you're looking to buy a home. Very simple, very easy. Commandment number 4, thou shalt not spend money you have set aside for closing. I wish I could grab this freaking camera right now and shake some of you who be wasting people's time with this. You guys, I don't understand. If you're trying to buy real estate, why are you using your money you have allocated for your real estate transactions to do everything else? Look, if you ain't financially ready to buy real estate, sit on the sidelines until you are. Don't be robbing Peter to pay Paul. It don't work like that in real estate. You need your capital. Too many times people will have X, Y, and Z amount of money in the beginning of a process, but they get into contract and then when it's time to close, then they short the close. Every real estate and loan officer in the world can fucking attest to this, because we all go through this. Please, people, commandment number 4, thou shalt not spend your money that you have set aside for a real estate closing. All right? Number 5, very important. Thou shalt not omit debts and liabilities from your loan application. Whew. Let me tell y'all one of the most common things that you guys omit from your loan applications. if you're on the deed of other people's houses, like your mama, your daddy, your grandma, your grandfather, your uncle, your auntie. You have to tell your loan officer. Remember, folks, deed is ownership, okay? Just because the mortgage is not in your name does not mean you don't own that property. It's going to come up during the underwriting process. So you want to tell your loan officer, your realtor, whoever you're working with, that I have my name on the deed of this property, this property, this property, but not the mortgage. Because now what happens? The lender, we have to include that into your debt to income ratio. And now that can cause you to not qualify. It happens every day, folks. So remember, if you have your name on the deed of a family member's house, a cousin's house, an investment property, disclose that to your lender, please, so that way we can calculate your debt to income ratio properly from the very beginning and give you a true pre-approval. All right. Number 6, and I got a lot of comments and DMs about this. Thou shalt not buy furniture. People like, yo, Matt, why can't I buy furniture? It's very simple. I'm not saying don't buy furniture. Look, we're living in a I ain't gonna say post-pandemic. We're still kind of in the pandemic, and things are still delayed. And furniture is one of them. Trust me, I know the pain of trying to buy some furniture right now. It takes 4 or 5 months. But you have to understand, what a lot of you are doing, you don't understand your debt to income ratio. You don't understand if you're at the max, you're in a good position or not. Because what happens is folks will go to these stores, they'll take out credit for the furniture and buy $10,000, $15,000 worth of furniture. And now what happens? Your debt to income increases because you added on new debt. Or you're spending money, like I said in one of the commandments, that was used for the real estate transaction, but you're using that cash to go buy your furniture. Never buy your furniture. Number 1, because it can, if you're using credit, it can increase your debt to income ratio. Number 2, you can be using cash that you have set aside for your closing and your transaction for the furniture. And number 3, which should have been number 1 reason why you don't buy furniture, is because you don't own a fucking home yet. Why are you buying furniture on a house you don't even own? Look, guys, anything can happen in real estate. Deals die every day, B. So if you're buying furniture before you actually own the house, now what if the deal dies? And now that furniture is kind of a waste of time, right? It might not fit for the next property that you have. So rule of thumb is don't buy furniture, people. Be patient. Sleep on an air mattress for a while, all right? Number 7, commandment number 7, thou shalt not originate any new inquiries on your credit. Now, again, you don't want to take out new credit cards or apply for new credit cards. You don't want to apply for auto loans. If you're going to shop for a mortgage, make sure you're doing it within that 30-day time frame, shopping for your mortgage, because the main thing is you don't want your credit score to drop. Remember, a pre-approval is good for 4 months. So if you get pre-approved, let's just say here in October, right? That pre-approval is good until February. But let's just say you don't find a house until January, end of January. Now you have to rerun your credit. But if you ran your credit several times, holidays are coming up, you got Black Friday, you got Christmas coming up, New Year's. These are big shopping times and a lot of deals happen and folks open up new credit during these times. Now, you open up this new credit, you got these new inquiries. When you finally find your house that you want, now the lender has to rerun your credit because your credit has expired. Now what happens, right? Your credit score took a dive, and now you might still be able to get approved, but your interest rate has been impacted because now you have lower scores. So my advice is always, don't apply for new credit if you don't need it. That's commandment number 7. Number 8, thou shalt not make large deposits without checking with your loan officer first. Yo, I can't tell you how many times you guys are just taking mattress money, dumping it into your account. You got susu money coming in. That's all unseasoned money. We can't use that. Any large deposits have to be sourced in season. Typically, rule of thumb is anything, and it all depends on how much money you make in your W-2s or if you're self-employed, how much money you're making. But rule of thumb is what I try to tell anybody, is if you're depositing over $1,000 a month into your bank account, be prepared to have an explanation for it because underwriters will want to know where that money comes from. And if it's mattress money and you were planning on using that mattress money to close this transaction, guess what? If you can't source it, the lender is not going to use it. So rule of thumb, if you're going to deposit unsourceable money into your bank account, do that 3 months before you plan on getting pre-approved or getting into contract. That way, out of sight, out of mind, the lenders don't see the deposit. That was a gem. So number 9, thou shalt not change bank accounts. Now this is a pretty simple one. What I like to do is I have a designated checking account or savings account, and I call it my real estate fund. So only funds that go into that account are coming from direct deposits, traceable sources, where if I present this to a lender, they can see that it's only deposits happening and it's coming from my payroll, right? There's not a lot of transactions. So if the lender don't see a lot of transactions, guess what? That's less paperwork and less questions that you have to answer, okay? So my advice to anyone who's looking to buy real estate, primary home, second home, Airbnb, investment property, multifamilies, whatever it is, and you're trying to do conventional FHA, VA financing, have a separate account, put the money that you're going to use in there for real estate, and don't make a lot of withdrawals. Don't make a lot of deposits unless they're coming from like your payroll or acceptable sources where we can document that information, all right? So don't change bank accounts. Don't give your lender 20, 30, 40, 50 different bank accounts. Have your money in one place. Create less paper for you, all right? And this is live. We ain't even gonna edit that out, all right? You saw how walking off the elevator, all right? Now, commandment number 10. We're almost done with this. Thou shalt not cosign for anyone. This should have been number 1 to me, all right? Thou shalt not cosign for anyone. I don't care if you got to do student loans, car loans, cosign somebody's house, whatever it is. Don't cosign for them, people, because now that can hurt you when it's time for you to get approved for your own loan. That debt now can be included into your debt to income ratio. I can't tell you how many times people have cosigned debt and it hurts them from doing what they want to do. All right, so commandment number 10 is probably one of the most important commandments out of this 10 home buying commandments, is don't cosign for anyone. All right, so look, those were the 10 commandments of home buying. This is a step-by-step, commandment, so you can get your game on track, not your wig pushed back. And this is for people who are just now getting pre-approved and are looking to buy within 4 months, or folks who are already in contract. If you're looking to buy from a year now, look, 6 months from now, 8 months from now, a year from now, 2 years from now, you have this information. Use it wisely. It doesn't pertain to you right now because you're not in the process. But for those of you who are looking to buy within the next 4 to 5 months or are currently in contract, these commandments are very important. Save this video, share it with your friends, like, comment, all that good stuff. My name is Matt Garland, NMLS number 58700, but I'm better known as MG the Mortgage Guy. Peace.